Hope you're all having a good Sunday, the 31st of August, on this Labor Day weekend. If you're in the U.S. or you observe U.S. work holidays and bank holidays, then well, happy Labor Day weekend to you. Um, by the way, in case you didn't know, there is a Labor Day holiday weekend sale happening at Alpha Trading. Just go to the Alpha Trading Discord, which is at alphatradinghq.com/Discord, and you can buy access to the Pro Trader subscription. Any of the subscriptions are available at the discount rate, as is the tutoring package for those of you who want the tutoring. Um, they're available right now on sale. Special prices you won't see again, at least until the next sale, whenever that might happen to be, which may or may not be around the time of the old Black Friday holiday sale come November and all. There might be a holiday, one or two before then, but no guarantees. Unless something spooky happens. Hint, hint. But the point is, if you wanted to get your hands on some delicious VEPS trading indicators and or tutoring by the likes of me or Bilbo, well, now's your chance to do it at a solid discount rate. Just go to the Shop Alpha channel, like I said. It's inside of the Alpha Trading Discord. And you too can get yourself a discounted price on those products. And that's all for now about that particular item. I don't really want to spend this video talking to you about that particular sale, but I did want to mention it because I know some people have been asking. So there you go. Now, when it comes to the actual market and the point of this video, which is what you came here for, right? Why isn't Bitcoin at 250,000 already? When every analyst in the market says it should be. Every prediction in the market says it should be. Well, not every prediction. The VEPS indicators certainly don't say that it should be. The VEPS indicators show that it's pretty much right word about it is, because that's what the market is leading to with the buy pressure and sell pressure currently happening. Now you can tell me, oh, this is because of all the artificial hypothecation of effectively paper Bitcoin by all these ETF providers, printing infinite gobs of Bitcoins that are really just paper Bitcoin, no different than paper gold, or even paper dollars, really, because ultimately, is that not what banks do? When they take your $1 and they loan it out another 100 times, 200 times, 300 times? It is, right? It's the same thing. Well, is there a possibility that there are some ETF issuers and maybe other companies who are selling some kind of paper Bitcoin product? The answer is, unfortunately, probably yes. But the difference between selling paper Bitcoin products versus selling actual paper gold, or paper dollars, if you will, is that there can only be 21 million actual Bitcoin. So, yes, you can cause temporary fiction to affect some part of the market, namely the ETF market, which may or may not affect spot prices because that liquid might otherwise have gone into spot Bitcoin. But I would argue that it would not have otherwise gone into spot Bitcoin. Do you know why? Because for 15, 16 years, there was no spot Bitcoin for it to go into. Right until early 2024, there was no spot Bitcoin for it to go into. So 15 years. And all that money that was sitting on the sidelines that did not jump into Bitcoin before then would not have had any new reason to jump into Bitcoin just because it's 2025 now. Right? So that argument is not logical. Like, at all. there is quite a lot of evidence that shows that, in fact, the ETF have driven prices by increasing the returns of Bitcoin. They've driven prices a little bit to the upside since they've launched, but not entirely, because obviously it's the actual VEPs that drives the returns. But you could argue that having the ETFs in the market has caused more people to get excited about buying and holding actual Bitcoin. And that's a hard argument to try to invalidate, because the evidence demonstrates that that's exactly what's happening. The evidence shows that people have been buying Bitcoin increasingly since the ETFs launched, and that a substantial amount of Bitcoins that were on the market about a year and a half ago are no longer on the market, precisely because they've been bought up and taken off of the market. And another chunk of coins that have left the open markets have gone into cold wallets. And as far as we know, they were not sold to different holders. They were just merely moved by their existing holders to cold wallets who are expecting maybe that their exchange will have some problems or whatever, and that at least if they have it in their cold storage, it's safe and sound there and nobody can touch it as long as they keep it secure. And they're going to hold it for theoretically much higher prices, because if you've been holding from before 2024, and in fact, if you've been holding any time before like January of 2025, or the latest highs in July or August, whenever it was, you are most likely in profit holding your Bitcoins. And so why would you sell them now if you're thinking they're going to go up much higher? You could sell them now if you're a relatively short-term investor, of course, or a short-term trader, obviously, right? But what you hold in your long-term bag has nothing to do with what you put in your daily trading bag. At least I hope not. And so that's why, if you look at the actual things that are happening with Bitcoin, right, is that, yeah, you can say, well, no, it's all this fake money, paper Bitcoin stuff that's happening that's causing the prices to go up. Or you could just be like, well, actually what we have is a case of the price is actually correct for where it is, given the current context of the buying pressure and the sell pressure. There's nothing unusual about it, right? We're literally seeing the market forces playing out. Now, you can say, well, clearly the prices are manipulated by bigger buyers. Every order, I don't know how many times I have to tell you this, but every order is manipulation. Hi, hey, hello, hi there. Every order is manipulation. Even before it's executed, an order is manipulation. Did you know that? When you place an order, it could be an order for $1, right, on some stock or asset of any kind, crypto, whatever, Forex, commodity, doesn't matter. When you place an order, even before it's executed, you have successfully manipulated the market, because your order is in the order book. That means your order is in the order queue. That means your order is calculated as part of the order queue information. That means your order is part of the order flow. You've manipulated the market. So, of course, when somebody has a bigger order, it's going to manipulate the market more than a smaller order. Obviously, that's how it goes. The biggest orders get filled first. But when you sit there and try to convince anyone, including yourself, that what is happening is because somebody with a big bag is moving some amount that you can't move, all you're really doing is griping about the fact that there are people with bigger bags than you. What do you want them to do? You want them to order less because they have more money than you? You just want them to blatantly not maximize their take from the market? For what reason? Like, seriously, for what reason? I don't mean that in any pejorative way. I don't mean that to be smarmy. I don't mean that to be mean about it. But in what way do you actually expect people who have simply more resources than you, in what way do you expect them to hold back on their purchases? For what purpose would you expect them to do that? Why would you expect them to do that? What under what pretext are they obliged to do such a thing? Like, think about it, right? Why would they do such a thing if they're already raking in, you know, dollars to bitcoins, more investment money than you're making on your Bitcoin buys or whatever? Why should they order suddenly less? Why should they hold less? Right now, again, I'm of the particular line of thought, and I can give you a reason why. Yeah? I have very good reasons why. Bitcoin wasn't made for them. That to me is a good reason why. That to me is, in fact, the main reason why people like Michael Saylor shouldn't be in Bitcoin at all. But nothing can stop him from getting involved. Why do I say he shouldn't be involved at all? Because Bitcoin wasn't made for the likes of him and his extremely wealthy friends. This is not to complain about it, but that's to say it goes against the ethos of Bitcoin whether you like it or not. Now, the fact that it has changed the ethos of Bitcoin, so be it. That's what's happened. That's the reality. You have to be able to accept reality whether you like it or not. And if you have to change it, then you change it one way or another, and hopefully legally and harmlessly. Right? But we all know business doesn't always end up being harmless. So, what is it exactly that we should expect? Is Bitcoin actually going to go to $250,000 or higher this cycle, next year, next week? And the answer is it's completely irrelevant. Because I guarantee you, it's not going to go from 100,000 to 200,000 in like one 1 minute candle. At least not right now, right? Like if it reaches 250K in a kind of a normal way that it would do it, then yeah, you could have crazy volatility, drop down to 250 and then bounce back up. Drop down from 250 to 100 and then bounce back up in a minute in some crazy event that might happen in the future. Yeah, that could happen. But for it to get from actually like 110,000 or whatever it's at, 108,000, 105,000, whatever the number's at, more than 100,000 still, to 250,000, it's just a matter of the VEPs playing out over time, and if we see continued buy pressure driving the price up. Now, there will come a time, and I've been saying it forever and a Wednesday, and we're already feeling it, and that's why we're talking about it in this video. There will come a time when the supply pressure and the demand pressure have enough of an imbalance that it will be unstoppable, and that basically when the demand will be continuing to be high relative to the amount of Bitcoin that exists on the market, will dwindle to practically nothing in terms of the actual real Bitcoins that are actually available on the market. I mean, like the circulating supply that's being offered for trading on exchanges. As that circulating number continues to dwindle, and the big buyers keep buying up more and more and more, and the big traders keep winning up more and more and more, there is going to come a point at which, when you have such a high demand on such a fixed supply, that the price will inevitably increase significantly. How do we know this? Well, look at Bitcoin in the last 16 years and tell me, have we seen the supply increase or decrease in those 16 years? You've seen the supply decrease in this. Yes, you can tell me, well, this hasn't been fully mined yet, so of course the supply is actually increasing. No, the actual total max cap supply that there can actually be, and even the amount available, has not really increased for most 16 years, because the thousands and millions of coins that are in fact lost or inaccessible were mostly lost during the initial years of Bitcoin's existence. Yes, people continue to lose coins even to this very day, right? That's no doubt. Nobody's doubting that. Nobody's saying that doesn't happen. But and to this very day, definitely people are losing access, which is kind of wild when you think about it. But yes, I see you and I say hello. But even though there are now 19 and a half or so million Bitcoins mined and 1.5 million left to mine, obviously there are far more Bitcoins lost than there will ever be mined in the future. So there's actually a limited supply. It doesn't even matter if we get all of the 1.5 million more Bitcoins, there will still be less available than the max cap by anywhere from 15 to 25, maybe 30% of all the Bitcoins are gone forever, right? They just assume 21 million. Okay, assume on the low end, 3 million are inaccessible, right? Forever. Well, it's actually more, but let's just assume 3 million. Okay. What does that 3 million tell you? That 3 million tells you that's 15% roughly, right, of 21 million. If it was 20 million, whatever, it'd be 3% of 20 million even, but it's 21 million, so a little bit less than 3%, whatever. And if it's 5 million, then it's more than 5%. I mean, more than 25%, right? Or roughly that amount. If it's closer to 6 million, which it might be, then we're talking like, almost 30% or so, which is an incredibly huge number of Bitcoins to be lost forever or inaccessible forever. 30%, right? That means that there's only 70% as much as the actual max cap supply suggests there might be in terms of in circulation or being held or accessible in any way. Which then means that the total amount being circulated currently, which is in theory, there's a couple million coins on the exchanges, of which maybe 700,000 or 500,000 are actually being actively traded, like in reality. Real actual Bitcoins being traded. Well, if you got less than 1 million Bitcoins left being actually traded, that does not bode well for people looking for prices to go to zero. Bodes very well for people looking for the upside in the long term, because that is an indication of long-term upside dynamics. Anyway, that's that. And I will be sure to follow up with you in the next one about this or another topic. For now, take care and happy trading. Peace.